ever thought about how interest rates work? Welcome to Your Clear Thinking. I'm Roderick Mitchell, author of Credit Straight Talk, Clarity on the Conspiracy. This video is part of a series of videos designed to help you build a solid credit foundation. In this video, I'm going to talk to you about understanding interest rates. Interest rates will play a big part in your standard of living. There will be a different life for you whether or not you have a good or bad credit rating. It will almost seem like there are two entirely different worlds. I will give a couple examples of what I mean. If you have a good credit rating and low interest rates, you can purchase a home for, let's say, $100,000 and expect the monthly payments to be in the upper 700s to the low 800s, $775 to about $840, which is a reasonable price to pay. If you have bad credit rating and high interest rates, you will pay a significantly higher monthly payment. Your payments will be in the range of the high 900s to about $1,200, $975 to $1,200. That's if you're allowed to purchase the home at all. The only difference in the two situations is your credit rating, which dictates the low or high interest rate. Think about this. Let's compare the two previous examples. In example A, the average of $775 plus $840 is $808 roughly. And the average of example B, $975 plus $1,200 is $1,088. Now take the $1,088 and subtract the $808 from it, and the difference is $280, which is enough to buy a mid-sized car purchased with zero down payment and 0% interest. That means you can get the car and the house in a good location with good schools for your children for the same price. Your low credit rating and high interest rates predict that you will be a risk of non-payment or foreclosure. The high credit rating and low interest rates predict you will pay as agreed and be a low risk. The high interest rates will force you to have to make a much larger down payment just to make the deal work, or you will have to choose a lower cost house just to keep the payments in about the same price range. And the larger down payment scenario creates the burden of you needing a lot of cash just to make the deal work. And if that cash is not available to you, the lower cost home is your only option. And when you settle for the lower cost home, you must be comfortable with it and willing to accept a lesser quality of living. The lesser quality of living in those locations will have their own built-in disadvantages, including lower quality schools for your children, overcrowding, drugs, and crimes of all types. Crime rates and bad actions in these locations are prevalent in both adult and child situations because everyone there financial resources are strained. Adults around you will engage in criminal acts like drug dealing, theft, prostitution, just to supplement their low income and the high cost of living. Your children will be tempted to engage in criminal acts like stealing, drug dealing, gang activity, bullying, because they can't get what they need or want from home. And there are other risks associated with bad credit rates and high interest that can negatively impact your family life, like long work hours, multiple jobs, neglect of preventive health care, unhealthy diets, and your children having a lack of parental supervision. Most of these risks will add to stagnation in you and your children's social economic advancement, and your health, and it would lead to increased contact with the judicial system. The other side of this living standard is that it will affect your ability to own a business because of your lack of money and bad credit. When you become a prospective business owner and have gained a certain level of excellence in whatever you do, and you decide that you are ready to start a business, you will realize that your bad credit rating will not allow you to get the money that you need. Your ideas of financial freedom and independence are dashed by a bad credit rating and have to suffer with high interest rates. A mistake that you made 7 to 10 years ago is coming back to haunt you. Your actions in your early days of credit misunderstanding and mistakes you've made will discourage lenders from approving any of your loans for startup money. The denial of credit will limit your ability for social economic advancement in your life and in your family's well-being. It will seem impossible or difficult to realize your dream to be a business owner because you are denied that credit for the money you need. But you are at a crossroads and you have some decisions to make. You must either postpone your startup or start from a drastically inferior position. And neither one of these decisions will be easy. You are about to enter a teachable moment in your life. If you take option A and postpone your startup business, you will always second guess about woulda, shoulda, coulda. And you'll end up trying to stay in the job market and just try to get the best job that you can get. If you take option B and start from the inferior position, it will mean you accepting inadequate equipment or paying extremely high interest rates on good equipment. The high cost of doing business will limit your opportunities. Your high cost of doing business will make your business growth slow and your ability to offer employment difficult, which will also reduce your chances of staying in business. In my opinion, this points back to the conspiracy idea that it prevents social economic advancement. The idea being that if we hamstring you now with this credit, we won't have to compete with you later in business. If you have a good credit rating, you can get approved for low interest financing and startup money. The low cost financing will provide you with new, reliable equipment and a lower cost of doing business. Remember, the image of modern equipment and vehicles make your potential client and employees think that your business is successful and reliable and growing. Old equipment and vehicles make your potential clients and employees think that your business is struggling and has a shortage of money and could go out of business at any time. The new equipment look inspires, but the old equipment look depresses. The public perception of your business can either work for you or against you. Your business is judged before you ever do any work or you offer any employment. Remember, the credit conspiracy is at work, killing your dreams before you even have a chance for them to start. Business ownership and success plays the largest part of the U.S. economy, and it is the common individual's avenue to realize the highest levels of U.S. society. In this video, I talked to you about interest rates and gave you a couple examples of how they affect your daily life. Remember to subscribe below and select the playlist to see all the videos in this series. I'm Roderick Mitchell, author of Credit Straight Talk, Clarity on the Conspiracy. Visit my blog, yourclearthinking.com, and remember, together we rise.